Good evening. Ira Epstein of Linn Associates with your financial market wrap-up for this evening of Wednesday, and we are now at August 26, 2020, and 6:25 p.m. Central Time. Well, the big event tomorrow is going to be the opening of the Kansas City Jackson Hole Symposium for the central bankers. And we're going to get an idea of what they're saying. I think the press has covered this already. The idea that central bankers are going to keep interest rates low and near zero, for us at least, as long as necessary. Could be 3 to 5 years, the press is saying. We'll probably see something similar out of Europe and Asia. And the reason is, I think the markets are willing to let this thing run until they have a handle on COVID-19. And nobody does just yet. We all are so full of hope that at this time next year, we'll have vaccines out there. But I want to tell you, at this point, we have a hope and a prayer. We don't have the science behind it. We're hoping that's what comes in. So why would the banks at this meeting do anything to upset the cart? They won't. They'll be saying they're going to keep rates low. They've got the markets back. That's going to be the unifying theme. I think you look for that. And in the end, it is supportive of stocks, but how much of that is in the marketplace? And as for the dollar index, I don't know. I don't see why you'd get that friendly on the dollar index on that scenario. I think that Europe and Asian might do actually better than the dollar on that. When we look at the S&P, what can I tell you? It's a new all-time high. You're already up 2.5% this week. I have a friend that's quite well-to-do. He called me today. He said, Ira, I just heard from my broker, the XXX. He's got a lot of cash, so he doesn't trade it. He's got managers. I made 1% today. He said, this guy has my portfolio weighted heavily with Salesforce and Tesla. Duh. What can you say? But another firm that he's got, they have mostly their products not happy. And what is he saying? He's going to have to consider getting rid of that. It's not the right thing. If you're judging by today, that's the problem. And I try to explain that to him. The other ones made him money, maybe not because this other guy's got him, but they're doing different things. That's what scares me when people do it. I'm watching that everywhere you go, everybody's talking about the market. That scares the heck out of me, I'll tell you. When you get everybody talking, that isn't the best thing that's going on. It's often a sign the market's very frothy. Look at the daily bar. You talk froth. Who cares? This market, until it's over, it's not over. And if you try to fight that, you're going to not be in a very good place. I recognized it in the April-May period, and I said, darn it, that thing reminds me of what I missed last time around. I'm not going to be caught in my head. I was one of the guys that thought the market at first would go back to retest the lows. It didn't. I jumped ship, just like that. That's what chartists do. You're not caught in the fundamentals. You're not caught in price-earnings ratios. You're talking chart action. And while we do get corrections, the chart action has been powerful, and it's been motivated and kept alive by one big thing. I'll show it to you in a moment. First, one of them is that the market stayed over the 18-day moving average. It came back over it, as you know, from the March period. It recovered, got up here in the June, fell back into a correction. And since July, it has not had any closes under that number. That's the first thing. The second is the market has got like a fence to control price, and that's the upper Bollinger Band. You don't see it just running and spiking madly over it. Goes to it, pushes it up a little, pulls back, and comes up. The third and most important part is during all this, you've been getting embedded readings. And when you get those and you recognize them, that's the powerhouse. In the hierarchy of things, to me, that's it. When they lose them, just like you did back here, see that? Bang, you get your small corrections. Small being you've been going to the 18-day average. Get to a lower Bollinger Band at some point, and I think we recognize at that moment we have a different animal on our hands. It hasn't happened. So yes, you can buy, be wrong, but you haven't come down to those numbers. Recognize what you have, which is a bull. NASDAQ, same thing. Except right here, you did get under everything. So the other markets was early back here. It didn't get over the 18-day average. You had your correction here. It got sloppier, and then it just started moving up. We know the NASDAQ has been carrying the market. It carried it out of the March-April period into the May, and it's still doing its job. It's the sexy stocks, the FANG stocks. They're making the all-time highs. You come over to the Dow, and while you call it the industrials, you know, somebody on my Facebook page, a YouTube page, I take that back, was writing, if they got rid of that name, wouldn't they be better off? I would think so, because it's not really about industrials anymore. It's an old-time index, it's weighted different and so on, but it's still very important. The S&P is the world index now, and obviously the tech index, I could argue that's the world, the real world index, but that's a story for another day. Suffice to say, as long as you have your embedded readings, which are only been right here recently, unlike the NASDAQ, you didn't do that, or the S&P. You had them here, you got sloppy in this whole time frame, and just recently they got stronger. The ugly chart has been the Russell. And the Russell has had a real hard time. It eventually rallies, because it screams, hey, if you're all going, don't leave me just behind here, but it's unable to be a leader of any type. So while people say they like it and they want to get into this, it is not the leader. You're looking down the road hoping it becomes a leader, not there. This is the laggard. And it's back at its 18-day average. You can't say that about these other indices. They look nothing like that. So understand what you've got, and that's always very important. Warning sign on the VIX. The VIX lost its embedded reading, and this has been a long time that it's been there. That tells me it's probably going back to its 18-day average now. So I'd be looking for that. Let's see if I'm right or wrong, but I think that it's going to try to make a run for that now. In the bond market, we still have a pattern of lower highs, lower lows, which flies in the face of what the press has been reporting of what the central bankers want to do, especially our central bank, of low for longer. Well, when you fall in this, it means you've increased rates. If you looked at today's mortgage numbers that came out, they were not good, as this market has been adding yield. In other words, the rates going up. What's been happening in reality is people have backed away. And I get calls from people saying, is this a good time for me to refi? I told some people, if you haven't done it already, I'd wait for this symposium. If they're telling you it's going to be low for a very long time, while you get these actions from time to time, the bigger picture is probably to the upside, which means even lower rates. Now, how low, I don't know. What part the Fed's going to step in and do, I don't know. I doubt they'll do yield controls. I think they can just go to the open market and control what parts they want via the auctions that come up. In the 10-year note, again, the 100-day average to me is what I'm looking at. Seems to be the number the market does not want to get under. It's been, just like in the bonds, coming down, but any move over 139.23.5 is a pretty good signal that we've seen the correction come to its end. What the market really did, and it's staring you in the face, it went from the upper Bollinger Band to the lower one, and it ran out of momentum either way after that. The dollar index, this market's now channeling itself. Do you see how narrow it is? It's in here. I don't call this a pipe. This is now not narrow enough. It is just going sideways within that channel. To call something a pipe, you got to get really narrow in it, and you're not there. It's either side of the 18-day average of closes. I see that as the major resistance in the marketplace. We'll see if the market takes on a trend or a move of one way after we start hearing from the central bankers, which all starts tomorrow. Eurocurrency starting to act like a market that wants to come up and get itself into a more positive state. I'd be watching this very, very carefully. The market today, if we look, the high was 118.45.5, and you're knocking on the door of that right now. The market still has a pattern of lower highs, lower lows, and like the dollar, where's it fighting? It's fighting right on the 18-day average in that sideways action. When I come to the Japanese yen, the market had been in a downtrend. Now it's neutralized it because prices are over the 18-day average. If they close back under it, the trend is alive unless you take out 94.86. Dangerous area right here. Big, broad, sideways action, not a pipe as I so often call things. You'll see in the energies, that's your pipe. Bitcoin. hit its lower band. What do you do when you hit the band first time? You're supposed to cover shorts according to what I teach in my book. Doesn't mean you have to do it. Not actually my book, my video course. That's really the right thing. You know why I said book? I have people doing work in my house and they wanted to see the book collection I have on finance, and they saw that I had written one, so that I got that in my head, the book. Lower highs, lower lows. I look for resistance at 118.68. The differential between the Brent and WTI. We're caught in a range of $3 to $2, and the market made a run just the past week to try to get up to that 18-day average, hasn't done it. Differential's very, very narrow at this point in time. These are the pipes. See how narrow they are? Are they going to form tops or bottoms? That's what the market is waiting on. I know that the producers wanted this to be a bottom, but is demand there for it with COVID? I don't know. Right now, it's total sideways action, and you've heard me say, if you want to lose your mind, trade in these because you get so frustrated. You think you're going to break out upside, you don't. You think you're going to break out downside, you don't. You move back to the upside, then it just doesn't go anywhere. It makes traders nuts. This is one of the things that does it. Same in WTI. Where the bullish action has been is in gasoline. I've been clear on that. I'm concerned that it's losing a little momentum, but it hasn't lost the embedded reading. Even when the Hurricane Laura comes in and closes down the refineries, the simple fact is there's a lot of gasoline in storage right now. So could prices go up? Let's assume you take out and Port Arthur, our big refineries down there. Yeah. I mean, that's still 17% of the U.S. production in one refinery. So we're going to be watching tonight to see what the action is. Playing weather, I leave that to other people. The trend is up, the bias is up, and until the embedded reading is lost, this isn't playing the weather. It's still very much in an uptrend. Nat gas, different story. Why did Nat gas break and lose its embedded reading right in front of this storm? Could this be that in this market, it's built in all the good news, all the bullish news, and it's ready for the correction? It's got me thinking that. I, for one, when you lose an embedded reading in front of a big Category 4 storm like this, shutting down gas platforms, and it doesn't want to rally, story's being told to you. It depends how you want to interpret that. I know what I would do. So as you look at all this and you look at the charts that we go through, these are our guide to technical indicators, volumes 1 and 2. I keep bringing this back because it's so good. It teaches you patterns, the different types of charts, trend lines, moving averages, the oscillators that we talk about here all the time. It ends up with all of this at the end of the day in money management, which people don't realize is as much a tool as every one of these that are there. And that is so important. I have my own principles on money management, and I teach it in my charting course. If you don't have money management skills, it's just a question of you going through your money. You're not going to be right every trade or necessarily any big groups of trades. You don't have to be. You can control your losses to have enough money left, you hope, to do what has to be done, so you try to beat the market. But if you're just one of those that no money management skills and you get wrong, having owned firms for many years, that's not the best sign you can do. It's generally a margin call and then frustration on your part. Oh, I can't beat those markets. I'm not going to do that anymore. It's skill in large part. How do you get this? Go to our website, www.iraepstein.com. Under the free offerings, it's all there. I'm Ira. You have a great day, and I'll talk to you tomorrow.